Welcome to XM.com. You're watching today's Daily Market Comment by Mario Sechikiriakos. I'm Christina Marujos. It was a relatively calm session in the FX space. The prevailing theme was a slightly softer US dollar, and most currency pairs traded in relatively narrow ranges without any impactful data releases or news to drive the price action. Traders are playing it cautious, hesitant to enter new positions ahead of what it promises to be an explosive week, featuring a Fed rate decision, a GDP report that will reveal whether the U.S. economy dodged a technical recession, and a storm of earnings from all the tech titans. The Fed will have a tricky communications exercise on its hands. It has to balance the need for shock and awe rate increases to slay inflation against signs that the economy is already contracting and demand is cooling off at a stunning pace. As for the almighty dollar, money markets are pricing in a triple-barreled rate increase in September as well, so any hints that the Fed will slow down if the growth outlook worsens might be enough to spark a retracement. That said, recession risks are not unique to the United States, and as long as every other major economy is struggling even more, safe haven flows are likely to keep the reserve currency in demand, preventing any trend reversal. Energy was the only corner of the market that experienced significant moves yesterday. Oil prices staged a sharp comeback, rising more than 5% from their lows yesterday, as supply nerves came back to haunt investors after Russia tightened the vice around Europe further, announcing that gas flows through its main pipeline would fall to only 20% of capacity. The risk that Russia cuts off the gas completely and paralyzes economic powerhouses like Germany during the winter is hanging like a sword over the euro. Anything is possible, but it is fruitful to consider that this is the nuclear option for Russia as well. Europe imports around 35% of its energy from Russia, yet Russia collects around 70% of its energy revenue from the European Union, and the supply is sent mainly through pipelines that cannot be rerouted to Asia. Over in the equity market, the earnings season will kick into top gear today with Microsoft and Google and many other household names releasing their quarterly results. Since expectations were set so low going into this earnings season, the underlying theme so far has been that the situation is not quite as dire as many feared. If the tech juggernauts fit this profile, the market could breathe a collective sigh of relief. Thank you for watching today's Daily Market Comment here at XM.com.